Hey, what's up, Dividend Nomads? Welcome back to the channel. Today, I'm going to talk to you about a few things, also give you a quick portfolio recap for the week, even though there's not much to cover, but I will go ahead and cover that anyway. But just a few things that's on my mind, and I'll talk to you about it because I'm actually thinking about cutting something from my portfolio and replacing it with something else. Or I could just add something else and not cut anything. So I'm going to run that by you guys and let you know what's on my mind and my thought process behind it and why I'm thinking about doing that. Before I take you into my computer and show you those things, first I'll dive into my portfolio and show you my portfolio, give you a quick recap. We'll just dive into it really quickly. It won't take much of your time here. So let's record the screen. 3, 2, 1, bam. All right, let's open up Charles Schwab. So here we are, my Charles Schwab. I'll refresh it for you. Let's go back to the home page. Here we are. Let's refresh this page. Okay, so here we are in my regular account. This isn't my Roth IRA. If you want to see my Roth IRA, you can go to my other channel, my Roth to Riches channel, to see my Roth IRA. I'll put a link to that below. Anyway, you can see $63,329. I've got $11.68 in cash. Now, if we view the positions, Coney, 1,805 shares. ULTY, 2,300. Misty, 450. Tesla, 120, and NVIDIA, only 23. And I didn't receive any dividends last week because the holiday pushed them back until Monday. So I will receive some NVIDIA dividends Monday, but it's nothing to talk about. It's like, what, 85 or 86 cents, and I got 23 shares, so it might make like 20 bucks or something. So it's nothing, nothing to write home about. And I didn't really buy anything either. As you can see, there's nothing really changed. And so I held off on that. So that's the portfolio right now. Like I said, you want to see the Roth, go check that out on my other channel, links below. But here's what I want to show y'all something here. If you look at this chart right here, see this chart right here is the yield max chart that shows how much everything returned over the course of the year, or over the course since inception, or for the year. Since inception. And it shows you how much they returned since the inception date, which inception date kind of matters, but it doesn't matter at the same time, because it matters like actually when you bought the fund or the stock. But this is what I want to show you though anyway, just in case. And also I'll show you my own personal thing that I've tracked myself as to how this went. But the one that I'm thinking of and talking about, that I was mentioning about maybe cutting, I'll show you here. If we go down here to the very bottom, or we'll put it at the very top for you. How about that? There you go, at the very top, ULTY. I'm thinking about cutting ULTY, and I'll show you why. If we look at ULTY's performance and we go over here, this is including dividends, the price plus dividends both. It's returned 1% since February of 2024. So since February until now, which is almost a year, this is January, so basically a whole year, and you put in 100% of your dividends back into the stock, you only made 1%. So that's not very good considering how the market did this year. Like, they really dropped the ball on trading this fund. And which mine is higher than 1% because I didn't buy in at inception, right? I waited a little bit and then I bought in later because I did see the dividends were nice, and I seen the price was becoming more stable. So that's why I bought it, or when I bought it. But it still has went down since I bought it. So I don't know. I'm struggling with this idea about cutting this or not. I could either cut it and put that money to work somewhere else, and I have an idea where I would want to put that money to. I'm going to share that with you in a minute. And then, or I could just keep it and let it keep paying me and just go ahead and buy something else anyway. What's on my mind that I want to buy, go ahead and buy that thing anyway. But I don't know. I'm kind of stuck up here thinking about this. So let me close this real quick, and I'm going to share with you my computer screen and show you my thought process and reasoning behind this, and also what I'm considering buying or even replacing ULTY with. So let me record the screen on my computer now. Maybe. New screen recording. Let's do it. 3, 2, 1. Bam. All right. So first of all, I'll share this with you really quick. Actually, I'll show this to you right now too. So right here, this is my portfolios too. I'll share this with you really quick, by the way. It says between my portfolios combined, my monthly income or whatever is $11,949. That's not correct. I just double checked. Actually, last month I received $9,300 and some change. So a lot less than this. So this isn't 100% accurate. And I'm just sharing this with you really quick because it's just on my mind. But if you really want to know what is going on inside of your portfolio, underneath the hood of your portfolio, so you really understand what it is you need to sell or buy or make changes in, et cetera, you really need to be tracking it outside of these dividend trackers. You really need to know what's going on in your portfolio. And that's why I track my stuff using a spreadsheet, which I didn't make no spreadsheet. I'm not selling no spreadsheet, no crap like that. I just stole one from somebody else because it's just easy and fast and convenient, and plug my information in just so I can follow my portfolio. That's the only purpose I did it for. And so anyway, if I'm going to show you this really quick, in my spreadsheet here, these are the positions that I have. And if you look at ULTY at the top up there, it says my market returns minus 5,700. Total return is 1,000. And you see my total return is only 4%. Okay, so only 4%. And that's, receiving dividends, reinvesting, all this stuff. I got a 4% return on ULTY when the market has returned like 13% or so, something like that, somewhere around there. Maybe 15%, something like that for the whole year. So ULTY hasn't performed that great. And if you look at Coney, like Coney's 9.8%, so it's also, compared to the market and reinvesting dividends and all that, it's still underperformed the market. And if I look at the other ones here, like Misty and Tesla, you can see they did really well. Misty's almost 60%, so it definitely did really well. So you could have took out all your dividends and lived off of them and still done really great, right? And then Tesla, the same thing, right? 47%, not bad. Looks like market return, 21%. So market return alone, if I lived off the dividends, I still would have beat the market. And same for here for the Misty position. NVIDIA, I'm not even going to talk about that because it's a brand new position and there's not enough shares to even talk about anyway. So I'm not going to waste my time talking about that one. But you can see these right here. Like if you pulled all my dividends out of Coney to live off of, I would have lost 17% of my capital. And if I did the same for ULTY, I would have lost 21% of my capital. But luckily, I was reinvesting that money, right? So I came out 4% ahead. But that's the thing I'm thinking about. Like I want this market return here to be positive because I want to be able to live off these funds, right? I don't need to pull money out to live off of. That's the whole point of this thing. And so that's why one of the reasons why I'm considering to cut ULTY. So let me show you something else here. If you go here on this here, I want to show you this. See right here, the symbol. We're going to compare ULTY to something else. Actually, I'll compare a few things just for fun. But I'm going to put ULTY in here. And down here at the bottom, I'm going to put in the one that I'm thinking about buying is XDTE. This is Roundhill's S&P 500 fund, right? Now, this is going to show you, actually, just click the button here. It says chart 10,000 invested. So it's going to show you if you put in $10,000 into both of these funds, how they compare, what the difference is. So let's do this, chart 10,000. So if you look here, this, make it over here so you can see. So right here, the start date, it says March. So this is when ULTY was incepted, right? So it compares these on the exact same time frame. So this is, nothing funny business going on here. It's the exact same time frame compared to each other. And if we look over here at the chart, this is with the dividends reinvested. So like I did with ULTY, reinvest all the dividends. This is what it looks like if you invest the dividends. The blue one is XDTE. The black one is ULTY. Look, XDTE outperformed ULTY by a long shot, by miles, right? And this is reinvesting the dividends. Now, if you don't reinvest the dividends, so you want to pull the dividends out to live off of, let's look at that. If you go down here, see this, let's put over here without dividends reinvested. Again, you can see the blue one is XDTE. So if I pulled all the money out of it and just let it do its thing, again, XDTE just destroyed ULTY. And if you look over here, it's like total return. If I took the money out of ULTY to live off of, I would be down 5.5% on that $10,000, right? I would have lost 5.5% of my own capital. Whereas if you look at XDTE, I would have took the dividends out, put them in my pocket, and I still would have gained 15%. So I would be in line with the market, basically returning the exact same amount of, growth as the market, but getting income to put in my pocket at the same time. So that's why I'm thinking about cutting ULTY and replacing it with XDTE because of this right here. I can keep the dividends, put them in my pocket, and I can still grow my value or grow my account, grow my capital by 15% instead of letting capital go down. So that's what's weighing heavily on my mind. Do I want to cut ULTY and use that money and just buy XDTE and keep investing more in XDTE? Or do I just want to just let ULTY sit there and just keep paying me money and just use that money to buy XDTE, just add this into the portfolio and just use the ULTY money to buy this instead of buying ULTY and just let ULTY sit there and, you know, wither away and just use all the money to buy this instead? I could do that as well. So I'm curious what you guys think about this idea, what you guys think about that. So let me know that in the comments below. But while we're here on this page, since I got you here, let's compare XDTs to some other things that are diversified funds, because that's one of the things I liked about ULTY is there's lots of things inside of it. So let's look at some more baskets. Let's look at the what's the Defiance one? The Defiance one is what, QQQY, right? QQQY? No, that's the NASDAQ one. We can check it anyway, just for fun. We'll check it, even though it's like compared to different things, because XDTE is the S&P, this is the NASDAQ, but we'll check it anyway, just for fun. Let's look at QQY. Look, XDTE destroys it both times. Okay, it's like quick and easy. What's the other one? This WDTE is the S&P one from Defiance. Let's check that one. WDTE, look, XDTE destroys it. Okay, let's look at some other diversified funds. Let's check out WiMAX. Everybody loves WiMAX. WiMAX. Okay, WiMAX. Let's check it out. WiMAX. A little closer with the dividends invested. It's pretty close, but XDTE still beats WiMAX. If we look at pulling the dividends, right? If you want to live off of them, XDTE is the clear winner. So, you know, there's that. If we look at, let's check out this one. Let's check out WiMAG, right? That's a Magnificent 7, which is basically what? It's basically the NASDAQ, really. Let's check it out. So this one, WiMAG is ahead if you reinvest the dividends and everything, and so with living off of it. Again, WiMAG is ahead. So that's another one I could consider would be WiMAG, but it's only 7 stocks, and you know, XDTE is the entire S&P 500, and I think I like the idea of having the entire S&P 500 more. So that's something to consider. Actually, let's check it. Let's compare QDTE. How about that? The last one. Let's compare these two. So let's compare the NASDAQ with the S&P. So the black one is the NASDAQ one. The blue one is the S&P one. They're pretty much neck and neck, like almost exactly the same. If you reinvest without, the S&P is slightly ahead because there was a little bit of capital erosion in the NASDAQ, but not much. So XDT is the clear winner of those. So I don't know. We want to check RDTE? We'll check it. Last one, promise. Last one this time. We'll check out RDTE just for fun. But I would rather be invested in the S&P 500 or the NASDAQ than the Russell. Let's just face it. RDTE shows it slightly ahead with the dividends reinvested, without also slightly ahead. That's surprising. But again, like I said, I would rather be tied to the S&P 500 than anything else, even more than the NASDAQ. So I'm thinking about that. Anyway, I would love to hear your comments down below. I don't want to drag this out too far. So yeah, let me know what you think. And hopefully I will see y'all on the next video. And if you want to see my Roth IRA, go check that out. It's on the other channel, Roth to Riches. The link is in the description below. You can go check out that channel. And see y'all next time. Take care.